So welcome back to the more casual day 3. Presume everybody had a good time last night? Too good of a time. There we go. So this is day 3. It's the ICO day. Some of the ICOs already went yesterday. We'll be able to wrap up the rest of them, and also some panels on sort of ICO best practices today. Those who slept in are going to miss a great panel coming up. We did a whole day prior to our global event last year. It was called ICO Boot Camp, and Leo actually did a great kind of oratory on on all things that you need to consider for your ICO from a legal perspective. People were like furiously, writing notes, and so I thought we're going to do a compressed version of that. And so in this talk, we're going to go and talk about the legal considerations, the investor relations considerations, and kind of the tokenomic considerations, advisory considerations, before you're really ready. Because I think one thing that I see in the market, and I see hundreds of ICO pitches every month, is that the vast majority of them are just not ready for me to see them, or they're certainly not ready for me to see them with my investor hat on. And so that's something that I think is, in a down market, and nice to see that Bitcoin jumped, about 5% during CoinAgenda, as Brad Mills calls it, the CoinAgenda bump. But obviously, if an ETF actually does come through, we could very quickly be back at 8, 9, 10,000, and then there's going to be more investor interest. But in the meantime, I think the market is getting more sophisticated, so you can't just go and say, hey, I got a white paper and I know how to program, give me money. So anyway, we're going to go and do a panel now. So we've got Leo here, and I'm also going to be bringing up Niels Wienstra from Tourig, which is as well as Beacon, and Leonard from Token Match. Come on up. Leonard Board. Yeah. Okay, so let's start with you, Leo.
Let's do it.
What are the questions that a team needs to ask itself when it says, I'm looking to fund my company through an ICO?
First question, do you actually have a business that will survive post-ICO? Which I think is a question that most teams, I don't know if they actually do the general, just standard due diligence. Does this product actually have a market case? Do they have a customer? Because I think of it in the terms of this. Before the word ICO ever came into play, you have to ask yourself, how do I actually fund this company? Do I bootstrap it? And if I got to bootstrap it, I have to see profit potential in the end, right? If you open up a bakery, if you open up a dry cleaner, you have an idea of, input and output. I'm realizing that when it comes to some of the businesses, the underlying businesses that are being birthed post-ICO, they actually have no real viable long-term business model. The idea is we're going to raise some money, we're going to have a lot of money, we're going to market, we're going to get some clients, and then we'll just survive. I'm like, okay, do you have a business plan? I'm like, do we need a business plan? Do we need that? They switch instantly. They know they have a white paper, but they don't even have a business plan. I'm like, you may want to reconsider that even though ICOs are a fundraising mechanism, and yes, we are in the infancy stages of this fundraising mechanism, which has been tremendous over the last few years, mature eyes will start to see crappy businesses for what they are, irrespective of how much you've raised, right? And we all know of the ICOs that have raised hundreds of millions of dollars, and if you could ask, or billions in some cases, you can ask yourself, will there ever be profit made? Profit? Was that even a thing, or was the idea of just raising money the entirety of the ICO?
Now, I think you also have to look and see, are you a platform? Are you an application? Because Ethereum will never make a profit. It doesn't have to. It's a pure platform play. I mean, most tokens will separate the entity of sort of the blockchain entity and the underlying business. So the underlying business, as I've often said, that's equity. That's whether it's a security token or VC back or bootstrap or just funded through a mechanism that is supported legally in the jurisdiction by the blockchain that in many cases is best off being a nonprofit because you never sell your blockchain. Mm-hmm. It's the Linux Foundation and Red Hat. Those are sort of like the models that came from the original open source pre-blockchain world. And I also like to say too that the token really in a pure evaluation from a token investor, you don't care about profit if they're not using the token. All you care about is the top line. If you have a stable number of tokens like Bitcoin is not a for-profit business. If you have a stable number of tokens or predictable supply and the demand keeps going up, the price at some point has to go up because people need that to do smart contracts, to do payment fees, to do gas, to do whatever. Whereas even if it's tied at the hip to the token, the for-profit company needs to have both the top line and the bottom line, or at least a path toward the bottom line, plus growth projections to make sense to a venture investor versus a commodity investor. Commodity investor is looking essentially into buying digital gold and wants to know what the pricing mechanism is based on supply and demand. That's it. Gold pays no dividends, as Warren Buffett famously says. The gold mining stock has to have profit. Gold can be at an all-time high, and a gold mining stock can still be stupidly run and go out of business, and vice versa.
Agreed.
Well, I mean, I think also the thing in this business with the ICOs is, I mean, we've been sitting in these kinds of panels now for a year and a half, touring the world, and you see a lot of ICOs pitch and a lot of ICOs you talk to. Fundamentally, loads of these companies are what we traditionally have seen as in the seed round phase. I mean, we used to do the .com days back in the late 90s, and the seed round we got was $350,000, right? And then we went to an A round, $6-7 million, and that was actually high back then for an A round. I mean, loads of these organizations or these companies that you see nowadays, the projects that come to an ICO, are basically looking for big rounds, but the maturity level, both of the company as well as oftentimes also experience of the people themselves involved in it, is still seed round material. And you see a shift now, I think, from last year to now. I mean, right now you see some really strong founding teams. We see businesses actually have been around for a while and they're tokenizing part of the model, but still, it's to go back to the first point. It's what you need is you need to have a plan. You need to have a base. That's the one question is always, of course, is so what do you need the blockchain for, and how are you going to use your money? Yeah. And I was in a pitch really briefly before I let you speak.
Why do you need a blockchain? Should be the first question an investor asks any project.
So there was this fantastic project, and the guy was pitching it. It's an existing business, big customers, big clients. But I asked him, so what is actually the use of your token? And he didn't really know yet. We got to work that out. And then we asked him how much and how can you use your 30 million? How much you look to raise 30 million? How are you going to use it? Well,
these are tactics that have the strategy of why are you important to the world. I used to be on a judge on panels throughout the history of the old Inside Bitcoin show with Stuart Quealy running that for many years, and one of my other serial judges on the panel was Stephen Waterhouse, who at the time was with Pantera Capital for many years. Now he's got his own ICO, Orchid, and I remember last year in Barcelona, I asked him at the first CoinAgenda, just before it, I asked him, I said, so you would always be the one person on the judging panel when someone did their, old school looking for VC money for a Bitcoin wallet or exchange or some kind of new idea, but they were still looking for funding for a for-profit equity stake, he would lean through, because they would put up charts and graphs, and he would say, how do you make money? And if they didn't have a quick answer to that, he kind of like scratched them off the list. And I said, well, now that we're in a token environment where it's about scarcity, and Ethereum doesn't have to make a penny and it can still be a gigantic multi-billion-dollar entity, what is your new question that you have to ask everyone? And he thought about it and he said, why does anyone need you? Which is kind of a merger between what both of you said. Why do you need a blockchain, and do you have a business after the ICO? That's correct.
So, not to disagree with you, but in terms of priorities, obviously you need a business plan, obviously you need token economics. But I think, having been an entrepreneur all these years, that I've started with business plan A and I've ended with exit C. To me, the most important thing is the team, because all business plans, especially in the rollout of an innovation, I mean, who knows what the penetration of wallets is going to be? Who knows what the regulatory environment is going to be 6 months from now? So you bring me your business plan, and in 6 months it might be completely obsolete. I mean, in March of last year, the business plan was utility tokens all the way through, and it might still be, but there's a lot of question about it. So to me, the most important thing is the team. These guys, these ladies need to pivot, need to move, need to find the avenues and find the ways to make money, to increase the value, to generate PR. And that's the most important thing, is the human content of that team, in my opinion.
So you're all investors, as well as working in legal and advisory capacities. With your investor hat on, before you write a check, what do you look at when you flip through a deck, when you look at a white paper? I mean, I also look at the team. I look at, what's the background of the CEO? What's the background of the CTO? How deep is the team? How long have they been in blockchain? Do they have an existing business that they're leveraging it? Who are their advisors? Do they have other strategic partners? And do they communicate their vision clearly? Leo, what do you look for?
I look for all of those things in addition to, and I'm more of a bearish investor when it comes to a lot of startups, but I do get into startup investments as well. Whenever I'm getting into a startup, I always ask a simple, basic question. What's the efficiency scale, right? Are we providing an efficiency that the market will naturally steer towards? A perfect example, if anybody walked into this room back in this is 1998, and you heard the pitch for Netflix, right? The idea is, hey, everyone goes to Blockbuster or goes to rental video stores, and wouldn't it be great if it just came to your house? Well, human efficiency is based on how much work, how much output to get the same amount of input. I don't have to leave my house to get a video. I spend the same amount of money, or maybe even less, to get the exact same movie. You know what? I like that efficiency idea. Efficiency, check. How is the team? Check. How is the business model? Check. I think I'll go ahead and write a check, because naturally human efficiency is going to make this particular product become an extinction level event for the old way. Computers beat typewriters, Netflix beats Blockbuster, so on and so forth. So I tend to look at, are we solving efficiency for the humans that will be using the underlying product? And then usually for extinction level efficiency events, there's typically no other use case. So you almost kind of have to see that, yeah, Uber is going to overtake taxis, but it doesn't really take a huge leap of faith to know that you come back 20 years from now. If regulators didn't get in the way, there probably would be no taxi industry. It would all be peer-to-peer. And I look for that in blockchain too. If you're doing something...
And if it's driverless, there'll be no Uber drivers.
Yeah, exactly. Once it's driverless, there's the exact constant efficiencies, right? So in the end, I will always look to see, are we regressing towards efficiencies, or are we just copying something that already pre-exists, or are we solving a problem that no one actually ever asked to be solved, right?
Actually, you took the words out of my mouth. There's a lot of blockchain companies that we work with, or that we come across our desk, that provide a solution, but they don't necessarily have figured out the problem yet. And you're asking a guy that actually comes from the enterprise business, and what we look at really is traction in the industry. So, for instance, if there's ICO projects, and I think they've been at your show in Barcelona last year as well. They were called Winding Tree, the travel guys, and very nice guys, and they were pitching. And they came then to the slide that had the advisors on it. And normally it's the same faces on every slide. No offense, Michael, but but these guys had an advisory team only from the travel industry, or almost exclusively from the travel industry. And then after they pitched, they said, well, we have a problem, Niels, because we want to see do we still want to go through an ICO or not? And so what do you mean? Because well, we have also we can work with a big founding customer in Lufthansa. And if we go for that, we don't have the time to do the ICO. And I said, dude, go for the customer. Build the company first. And you have something to show, and then you get to the stage. So we are looking at traction in the market based on a real-world solution to a real problem.
Well, and Leo, we've discussed this a few times. At the height of the ICO boom, which we're just kind of receding from right now before perhaps the next wave comes and is slightly changed, you're looking at the cost of, the early ICOs, Made Safe, Ethereum. I mean, they might have had an entire marketing budget of like maybe $100,000. Now it's like typical ICOs are having $500,000 to $1 million and up. And then when they finally raise their money, they knock on Binance's doors and find it's $5 or $6 million to get in. You were noting it's cheaper to do an IPO.
Absolutely. So even what we're doing in our law firm these days is any ICOs that we deal with, we are now saying, okay, if it's a blue chip ICO, meaning the team is great, they've done great things in the past, money's not really the issue, we know you're going to raise money at the ICO level, we're going to start treating those ICOs on IPO track from day one, meaning we're going to be doing everything as though we are going public or we're going to be doing a public technical, maybe a public exit, or at least prepping for public exit within the next, 36 months post ICO, give or take. Let's say add a few years, depending on the team dynamics, market dynamics, et cetera. But say 3 to 5 years post ICO. The reason why we're doing that is we're looking at the trajectory of listings in exchanges, and we're also looking at market softness, and even in the best possible scenario, we look at the listing fees on huge exchanges like a Binance and whatnot, and we look at where that trajectory is going, and we say, well, if this market were to double or triple in size today, you could be looking at fees for listings in excess of $5 to $10 million. But you're still dealing with a sub $1 trillion cryptocurrency market. You could go into the NASDAQ NYSE and you would be dealing with trillions of dollars in volume within the course of a week, right? So we're trying to make our dollars go further by looking at some of the legacy traditional cap markets, as well as doing our ICOs and making sure that we don't miss a chance. Because why am I going to give you $5 million to be listed on Binance when I could give with that same 5 or 6 mil? I'm on NYC Euronext and I have access to $300 billion. Just that day, just for that day's volume relative, you're raising hundreds of millions of dollars on IPOs, obviously, so people maybe who don't come from that IPO world, I do have a background in M&A, it's kind of ridiculous what they, like that you're raising so little bits of money on the cryptocurrency exchanges and paying absorbent, almost 10x of what it cost to even list with like NYC Euronext or NASDAQ. And if this is supposed to be efficiency, remember, Binance and exchanges like that are supposed to scale into efficiencies, make things easier, right? Access to capital easier. But if the trend is going in the form of greed, just like supply and demand, then you've priced yourself out of the market because you're not competitive at a $6, $7, $8 million listing price because you just feel like you can get it. I'll take that $8 million and say, you know what, screw you. I'll go ahead and go somewhere else, and I'll go to NASDAQ, get a reverse shell, do the same marketing campaign, have maybe $400 million in liquidity within the course of 2 or 3 weeks, post IPO, right? Within a NASDAQ IPO. You can raise billions on your IPO for NASDAQ anyway, so that's just giving you food for thought. If you do intend to do an ICO, do think that you have a viable going concern, you have a business, you could probably have multiple acquisitions, you can do an insane roll-up and still go IPO without a drop of a hat and have a pretty decent exit, even on a 5-year-old, 4-year-old company that just did an ICO.
In blockchain, there's been really no legitimate big there hasn't been a Netscape yet in the blockchain space. There have been these little things that like change the name of a penny stock from Long Island iced tea to Long Island blockchain, and their stock quadruples, right? And the SEC sort of like smacked down a little bit on that as sort of improper, marketing. But what do we think the first big IPO is going to be in Coinbase, maybe, or maybe one of the mining companies?
I would see a Bitmain, I would see a Coinbase, I would see those blue chip guys who already have a lot of they're already kind of ready on IPO track anyway. They have tons of venture capital, tons of traditionals. So when
Bitfury or Bitmain or Coinbase go out and they hit the market at a $4 billion valuation, if they go up from there, then all of a sudden the game is on, and I would think it would, sort of have a lot of other people who are either having already done ICOs or try to make that decision of like venture track or ICO to look and say, IPO might be a way to do that. And it's not just NASDAQ. I mean, obviously you've got a lot of markets in Europe, you've got a lot of markets in Canada, in Hong Kong, and in a competitive environment. I mean, we're looking at, in the late 90s when you had the massive boom of the NASDAQ from 1,000 to 5,000, there was such a hunger for people to like be starting and funding and profiting from public IPO.coms. I mean, there was 250, I think, that went public in 1999, and then a couple years later there was like almost zero. And you went from everybody having to buy $1,000 shares to be able to coddle their $200,000 programmers with $1 million stock options from going next door, and 2 years later you were lucky to get a job with a folding chair.
Yeah. So, and this I guess is my last position on it. My theory is in the next 2 to 3 years. Everyone probably in this room survived the web the dot-com bubble. But I think enough time has passed that amnesia has set in that the dot-com bubble will come back again in the form of the blockchain dot-com bubble. So let's say Coinbase kicks it off. I think that's going to start a cascade. All that money that everyone thinks is coming into crypto, it's going to come into crypto, but it's going to come into cryptos that went the traditional route and who also have a performing token or blockchain that's paired to them. Because as you've seen, they really want to figure out how they can change their company names and get in and turn a traditional company into a blockchain company, but a true blockchain company that actually goes IPO and let's say does gangbusters on pick any freaking board in the world. I think that's just going to start a global cascade. And there'll be a lot of returns made. There'll be a lot of money made. There's going to be a lot of people getting very rich. And I think that's going to last for multiple years.
And it's a lot easier for, Joe and Mary Sixpack in Iowa to go to their Charles Schwab and say, oh, I guess I should buy some of that Coinbase. And by the way, I see there's now 2, 3, 4 ETFs out there. I guess I should buy one of those. And here's a triple leveraged ETF on the Canadian exchange, and here's now a mutual fund that is picking baskets of public stocks. Here's a public company that starts picking a basket of ICOs, and then all of a sudden you've got 30, 40 public companies that have done IPOs in maybe a 18-month period. As the price of Bitcoin gets back to 20,000 and above. And that usually means that it'll go above where it should be, and then it'll go back again, and then we're back to it's only 18,000. Bitcoin's dead.
Bitcoin's dead, yeah. So, yeah.
So I'll ask one last question. I'm going to turn it over to the audience. Obviously, we're here in Malta for a reason. Leo, I think you're one of the great experts on sort of like picking the right jurisdictions for the right reasons at the right time. If we have a handful of ICOs, one's from Asia, one's to have they all want to have global marketplaces. One's from America, one's from Berlin. What are the considerations you look at in terms of structure and jurisdiction?
So one's from Asia, one's from USA, and then one is from Berlin?
Yeah, anywhere in Europe, but Berlin.
Okay. So so I guess considerations are one thing, and then I guess let's start with the Asian. Let's start with my Asian markets. Obviously, some of you guys saw the speech from Malcolm Tan, which was great synopsis of everything going on in Asia, and in full consensus with him there. What I would do for what I think of when an Asian ICO, someone from the Asian markets wants to conduct an ICO, I tend to say, where's your customer base coming from? Where do you intend to raise money? Typically, it's anywhere in the world except for wherever we will get arrested, right? So we're happy to take money from anyone that's willing to give it to us. In that case, I go for the path of least resistance, and I look for market congruency. In this case, it would probably be moving everybody into Singapore for that particular degree. Ease of access to defining what my token is. If it's a security, I have access with MSA. I have access to strong definitions for what a utility token under Singapore. I have access to banking for the underlying operational accounts, so on and so forth. So, and also, if I'm, let's say, a Korean businessman doing an ICO in Korea, their laws are very, very not clear at all relative to the current Korean moratorium and whether they'll be lifted or not lifted. So why even deal with that? Just go straight to Singapore and get my definitions done, develop my accounts. And if it's security, if it is, I don't, some people have talked to me, the idea of what people call a security token, I tend to kill off the word token. I just say, is it a security or is it not a security, right? And Singapore's been very clear on what is a security, what is not a security. So those are the considerations I would have for my Asian ICOs. For United States, first I would pray for them. I would say, you gotta get close with your God. No, because straight up insane, you need Prozac and a bunch of other antidepressants because you're going to go through extreme torture dealing with the multitude of conflicting states and the schizophrenia associated with this law and that law. I'm practicing, of course, in the United States. Wyoming is the lovely child that we all love, and we're so proud of Wyoming. It's like you did a great job, but. Now we're waiting for Wyoming to have grandkids, because we want to see how the family grows. Right now it's just Wyoming, and he's out there, being a young rebel, on his motorbike, doing great things. But we have some kids, get some other states involved. But so when it comes to the states, biggest consideration is the problem with the states relative to the consideration I'd be giving them would say, I'm going to split you up. I'm going to take your token sale, if you were doing a utility token, and I'm going to remove it from the entire United States. But for everything other than that's everything other than a security. If it's a security, we're going to sell it in the States. If it's not a security, we're going to sell it outside of the States. And that's the number one consideration we're going to look for. If they're coming from the States, they're going to probably say, hey, this is a utility token. Can't we just sell it here? I would say, well, no, realistically, you really couldn't get away with it like that. But what we could do is we could sell things that are relatively affected by your derivative utility token. So what we'll typically do is we'll take a friendly jurisdiction, such as the Cayman Islands, Belize, Georgia, etc., and we will establish the foreign token sale aspect of it. Then we'll split level the equitable portions of whatever they're willing to sell on the equity side of the business. And some of you guys know this is like Reg D and Reg A, Reg CF, etc. We also do other things like profit interest grants, phantom stocks. We add different layers to our equity spreads that we can build the biggest pool for our American buyers. Because an American buyer may not be able to buy a utility token, but maybe he's willing to buy 1% of future profits on a 4-year term, right? And we can sell that under multiple different provisions. So we achieve the same goal. We may not, my American buyers may not get tokens, but they'll typically get things that are quantifiably of value, right? They might get stocks, they might get preferred, they might get different matrices that we've provided for them. So as long as my American ICO issuer is open to those different strategies, it's typically pretty easy to get them both the utility side and a very comprehensive equitable
Let me follow up on the Wyoming question, because we've discussed this a few times. Mm-hmm. Wyoming, if you only did it in Wyoming, answers all the questions. Mm-hmm. They will actually grant you utility token status exempt you from securities laws in Wyoming, exempt you from money transmission requirements in Wyoming, deem you to be property, and exempt you from property tax. The controversial part is the other 49 states. Are we in agreement that if you only sold to Wyoming residents, you'd be okay?
I'd say yes, you would. But the biggest caveat becomes...
So let me do part two.
Yeah, go ahead.
Because their official position is that if you're in the other 49 states, you simply have the offering be an intrastate offering where you have to buy it and maintain it in a Wyoming LLC, which they made a new law that you can now have Wyoming series LLCs, and anybody buys a token, comes with a Wyoming LLC, you just keep it in there, and they're like, SEC, you okay with this? And they're like, we're not going to tell you.
Yeah, and that's been the biggest issue. So we've had a lot of clients who've had that same
They
issue.
bring in guns and cowboy hats to when they are in the legislature. Wyoming has never answered a subpoena from the IRS. These are badass guys.
Yeah,
They are the motorcycle guys.
Yes. Anybody have any?
Well, I mean, to go back to the question, we do a lot of things in the UK, for example. We like the UK, mostly security related. We also do a few things in France. The French regulator has been quite supportive. And
These are all for securities, though, right?
that's for security. Yeah, well, so we're doing 6 projects now. It's actually under a European Union grant. So now they have to pay attention, regulators in Europe. And we're doing it in the Netherlands. And the AFM, the Dutch regulator, is part of the project. So you have 6 startups, and those are all utility tokens. Now they need to be classified as such by the regulator. Otherwise, the Brussels money is tied up, and nobody wants that. So we see things happening. I do have to say that I think for a utility token, I think Malta would be a very good place to be. Very good place to be. The way they go about it, we were talking at dinner yesterday about it as well. What I like to see is the government here step in and proclaim themselves blockchain island, but actually bring some substance to the conversation as well. Open up the conversations and let's get some projects here into the free port, doing supply chain on blockchain, open up the cohorts in hospitals for some healthcare stuff, and really make this also a test bed. Estonia did this in fintech and payments 10 years ago. This can be a fantastic test bed as well, just because it's smaller and just because you have the cohorts here. So I think if Malta really wants to be a truly blockchain capital, or blockchain island, I should say, get the substance in, create the jobs as well.
By the way, I own the domain blockchainisland.com for Puerto Rico. We've been calling ourselves Blockchain.
I know.
I may have to start calling it Blockchain Island West because they're pretty branding it a lot better because Puerto Rico is still sort of like, we're going to think about being Wyoming South.
I like that.
And they haven't quite done it.
Leo, I have a question for you.
Yes.
From legal costs, being that you've done so many of these, where from the cost perspective and time perspective, where would you point ICOs to?
From a cost perspective, in terms of what their budgeting should be?
Yeah, I mean, how much does it cost to do all the legal paperwork?
Okay.
And how long does it take to be ready to ICO from a legal perspective?
And we're going to just deal with it from again, non-security based tokens, because the securities side of things could change your pricing models quite extreme. Firms vary a lot on pricing. I've known firms that are charging significant amounts up front. I know firms that are charging a little more reasonable, maybe like what we're doing, and everything in the middle. But on average, what you should anticipate to expend within your as a legal fiat, the fiat component of your legal infrastructure, and I guess I'll break it down like this way: the legal infrastructure budget will comprise typically of 2 things or 3 things. A fiat component, a portion of the token supply itself, and in some jurisdictions, a portion of what is raised, like any other capital raise, whether it be crowdfunding or whatever. Typically, you should budget anywhere between $60,000 and $75,000 within the fiat component of the raise. This could vary by firm, this could vary by jurisdiction, but I think with $75,000, you have a pretty wide swath of firms you can choose from relative to their experience level, etc. I tend to find out that the less a firm knows, the more they charge. That's what I find out. So, if you find firms that are trying to get upfront costs of, let's say, 150,000, 200.
I've seen up to 500,000.
Yeah, those firms tend to find firms like ours and hire them to do the back end work. So do be mindful if you're starting to see like huge upfront bills relative to doing an ICO. Then secondarily, relative to your the token supply raise and I just call these are like the post ICO fees you're going to typically get, like you would get with any other crowdfund. You can typically look to expend anywhere between 2 and 3% of your raise, and if you have tokens as a deployment, you might expect to expend 2 and 3% of your token supply, give or take, right? I've seen firms charge 5%. I've seen some charge 4%. But again, a lot of it's negotiable. So in your head, think have a legal fiat budget of about 75 grand. Think be ready to part with between 2, 3, and possibly even 4% of your raise, and be ready to part with about 2 to 3 to maybe 4% of your token supply on average for most firms. And then there's everything in between. Some firms will say, just give me 300,000, I'm good, But then at the same time, you really have to know what you're getting for that 300,000 up front. That would be my suggestion. And also look at the ICOs and what they've done in the past. Has that firm actually done an ICO? Are you the first one? I'm not trying to knock firms, but a lot of them think they know what to do, but they get into it and they are like, what the hell is this? Because I remember our first ICO that we did almost 5 years ago, about 4 years ago, give or take, 3.5, 4 years ago. There was no guidance. There was no like, hey, let's call someone. We had to figure it out from scratch. Now, going in, 200 plus ICOs later, yeah, now it's a lot easier. Yes, it is extremely. It's part of the fabric of my being now. But that wasn't the case. So I can imagine what a firm is going through today, when still guidance is even crazier, rules are even crazier, jurisdictions are even crazier, regulations are even crazier. It's got to be that much more, nerve-wracking for someone who's holding a license to be correct all the time.
Leo, how long does it take?
How long does it take? Well, it depends on, again, how efficient the firm is. If the firm has done many ICOs, they can typically get, from the second you give them their first dollars in, between research, memos, all of the base work that needs to be done on the outline, that should be roughly between 2 to 4 weeks, give or take. If they're kind of new, you need to give them about 6 to 10 weeks, because they have to kind of get their research, and you have to give them time to just learn what a blockchain is and Bitcoin, et cetera. And then the terms, most firms will stick with you just till the ICO is over. We tend to stick with you until for a period of 1 year. We have a tendency to say, we don't want to leave you with our legal work into the wild blue yonder, and now you've got $50 million, and at the same time, we're all in this together. Our names are still attached to it, so we want to make sure if you have a legal question, just come back and ask us. Don't be afraid, or don't go talk to like a lawyer B in your local neighborhood who doesn't even know what a blockchain is and give you the wrong advice, and then it gets back on forums. It makes everyone look bad. So we tend to always want to pair with our ICOs for a year at least, just to make sure that they did what they say they're going to do.
Sort of the chief legal officer role.
Yeah, you have to do some stuff like that.
And also, I think the country where you're doing it in is a massive driver of how long it will take. Switzerland, between January and now, I mean, the ICOs are dead in the water for a big part. Not because the lawyers are not good, but because they have very little to work with. And in Malta, you can get things going in 3 days. Legal opinion, confirmation, everything else, if you have the right people and the right contacts. So it really depends. It really depends also on the country. Yeah.
Great. So I know you have to catch a plane in a few minutes, so we got time for maybe 1 or 2 questions since we got started late.
Anybody have a question?
I think good.
Don't be shy. Come on. Nope.
Okay.
I guess we answered all the questions. Thank you.
All right, guys. Oh, Steve. Yeah.
Stephen Mead.
I know early on there's been a lot of what I call hopscotch, where you'll do a foundation in one jurisdiction and then your legal entity in another. Have you seen any movement where you can finally get just one jurisdiction and do it all within one entity, rather than having to set up this dual entity to try and get around all of the restrictions?
Actually, what I've seen is that it's not so much about dealing with one jurisdiction. It's more about risk management. because you could have always gone to Belarus, you could have always gone to various jurisdictions and set up an ICO from that jurisdiction as well as run the underlying company without doing the split.
Costa Rica.
Costa Rica. There's a lot of countries you could do this up till now. It wasn't so much about jurisdictions, it was about risk management. Problem was, you would deploy a blockchain in an existing business or a business that's to be a going concern. Something would happen with the blockchain, like for example, it would fail to launch when it said it was going to launch, or it misrepresented itself somewhere in the white paper. As a result, the existing business that was going to deploy that blockchain ends up getting sued. It's making real money, doing real things, and it's being sued because maybe the white paper was off by a month or two, and the market took a dip. So what ends up happening is your underlying investors for your I don't want to call it your real company, but your existing company is getting dragged into court because it decided to do an ICO. So I think the best practice has been typically always split out your blockchain in separate companies, irrespective of jurisdiction. It's just for your own risk management. So if something did happen, like let's say the Tezos issue, for example, that can be kind of sandboxed and dealt with on its own. Imagine if Tezos was actually attached to something like Amazon, and Amazon decided to deploy a blockchain and had the same Tezos issue. Well, then every single person would have a claim against Amazon and bring this massive class action lawsuit against Amazon relative to all of its profits, not just whatever it made in the ICO. So I think it was just more of it's a battle strategy versus a jurisdictional one.
Hi, Simon Dixon, Bank to the Future again. One thing I haven't seen much talk about is, I even think the SEC said it wrong. They talked about Ethereum converting from what was probably a security to then a utility. My understanding of this is that when you're selling a SAFT, it's not that your token converts to utility. It's that the offering is a security, but you try and maintain your utility status of the actual token so that it can then it can then trade on a secondary market. So the whole concept of it starts as a security and then converts to utility if it's sufficiently decentralized seems like a gross misunderstanding from the SEC. If you just follow the structure of make the offering a SAFT, a contract, an investment contract, a security, but then pitch and maintain and get the legal opinion on the utility of the token. Any thoughts on that? It doesn't convert, it's two different things.
I'll take a shot. I make sure I'm in full agreement. I'm in full agreement with you. I felt like there was a bit of a miscalculation in that aspect. I tend to think that this is the way I see it. I feel like when something is either wrapped within a security offering or is birthed from a security, it's similar to like permanent ink staining a white shirt. It will always be stained. It will consistently be a security. It will never, one day, hey, guess what, guys? Today, I'm no longer security. Well, it wasn't up to you. It was defined at your genesis. It was defined at your birth. Efficient decentralization, et cetera, those factor into the play, but those don't really have anything to do with the underlying security aspects test, whether you're doing a state test with, Reeves, or you're doing a Howey test, or whatever you're dealing with. There is no mechanism in which clear-cut decentralization, in and of itself, is a defining parameter. It's a prong within a multitude of tests, especially within the Howey component, but it doesn't stand alone to convert something from a security offering into a utility offering.
Howey is the perfect example. The orange was never a security. The investment contract in the orange field was a security.
There we go. So everything that follows that genesis will still be under that same security. Even though an orange in and of itself is not a security, a bushel of future contracts associated with the purchase of oranges 2 years from now, as long as I'm dealing within that same lineage, that's always going to be, the entire offering of that bushel of future oranges will always be a security. So just use the ink example.
And yet wine futures are not considered to be a security. It's just simply delivery a year later of a product. Otherwise, the Pebble watch and almost every other Kickstarter would be a security.
Yeah, it's because that's politics. We need crypto lobbyists in this business because a lot of that deals with politics.
One question, Simon. Simon, can I ask you a question? Simon, can I ask you a question for a second?
Okay.
So you did an ICO, and you actually went through the entire security hoops in the United States as well, right? And if I heard you correctly, Monday, you raised 31 million, and 129,000 came out of the States, I think. If you talk to guys here, the audience are doing ICOs, would you recommend being fully compliant, or would you recommend looking at being fully compliant in America, go through all the security regulations and checks to access the American investor?
I'd say that depends whether you are in America or not. If you're not in America, I think you're suicidal putting yourself in the American jurisdiction. If you're in America, then go through the loops. You know, you were born there. Sorry, bad luck.
Before you add your question, let me add this. Even though we're kind of talking in this way about America, do know that a lot of the major exchanges determine whether or not they will list you based upon American securities laws. So even if you didn't sell to even one American, your opinion letters typically need to say that you are not a security, give or take, by U.S. security standards, because it's not going to be the SEC of Vanuatu that's kicking in your door and putting your kids in foster care. So it's going to typically be a U.S. based police-ish type of organization. So do keep in mind that even if you're not selling in America, you still need, even if you're selling just to a bunch of people in France, you still need to be compliant with America because of the fear of retribution in case something happens.
Yeah, correct my answer. Definitely, if you can find the 3 lawyers that are giving legal opinions still in the US, that it's not a security, then use them because you'll need it for the exchange.
Yeah.
But judge it by securities law. Don't sell it in America. Restrict US, do everything you need to do. Do it as a SAFT, an investment contract, and really try and maintain a utility, but the legal opinion will still be needed for the exchange listing. Cool.
That's correct.
I've got 9 lawyers who work for me in 4 different domiciles, and we've decided that whatever is a security in the US is going to end up being a security in other Western domiciles. So we've taken quite a conservative view. But I want to come back to the interesting comment that you made, Lionel, I think, about risk management and creating essentially silos per domicile. We've decided to do that. But the issue that we're battling with internally is how many silos do you create? Because it ends up being ridiculous, particularly for a startup business, to have entities in more than 3 or 4 jurisdictions. So we have a subsidiary in the US, a subsidiary in Australia, to do exactly what you described, which is risk manage the transactions in those countries. And now we're trying to decide where the 3rd and 4th will be. We certainly don't want to end up in 50. We're trying to decide if we want to be in BVI or Cayman or Singapore. And I'm not sure there's a good answer.
Well, the question is the offering itself, is it a security offering or is it...
It's not a security. We're very lucky in that everyone has said that what we're doing is not a security. Okay. So really the risk management, I think, is we have marginal risk.
Okay. Well, let's go back and define it. When you say subsidiary, I assume, is it a fully owned subsidiary
Yes.
from the existing parent company?
Yes.
So remember, there are shortcomings associated with the subsidiary structure component. If you're developing fully owned subsidiaries in foreign jurisdictions, then really you're kind of stepping over yourself when it comes to the risk management side. You'd probably want partially owned or almost strategic relations between totally disparate sister companies, but not subsidiaries. So you're not doing anything necessarily wrong, but the way I would make it more efficient is I would decouple out of the subsidiary relationship, have specific countries that I'm operating from, but also you don't need 2, 3, 4, 500. You might need 1 token sale jurisdiction that's very favorable, that allows you comedy with selling in multitudes of jurisdictions. Then you just do geographic blacklisting of certain jurisdictions. Like, perfect example, let's say you're in Malta, you're selling to everyone but the US. That's a very common way of dealing with it, just for the token sale entity. Your operational entity, that could be its own thing. And then whenever it is time to patriate capital, through whatever means you happen to patriate, whether it's through credit lines or loans or direct investments or whatever you're using, then it would somehow find its way back to the mothership, aka the operating company. But I don't think you need to create too many subsidiary positions, because if one subsidiary gets sued, like I know in the States, if you're a U.S. company who has a subsidiary in Ireland, we can sue you in the States and get a judgment against the Irish company. So where was the legal protection? It really wasn't much. So
yeah, I understand that issue too. I'd love to have a chat with you offline about this, because I think you end up with all this structuring, trading, SEC risk for domicile risk, and even structuring risk. Anyway, thank you very much, and I'd love to grab your card on the way out.
it's a pleasure.
Okay, so we're going to now move on to the ICOs and thank our panel, and hopefully you catch your plane.
Thanks so much.